one thing that's pretty clear is that most people can't get their hands around Bitcoin because it's an utter paradigm shift. And why is it a paradigm shift? Well, because I think Bitcoin is the first digital money. I mean, it's the first digital money. Gold wasn't digital money, and fiat's not digital money either. And so economists and politicians and investors, they all lack the right mental model to understand Bitcoin, because science and engineering were so intrinsic to gold that we took it for granted, because gold it's a 10-pound lump of something, and if you get slugged in the head with it, nobody had to explain that science and physics mattered. And then science and engineering kind of became like quasi-irrelevant in the fiat world. Everybody just kind of, they ignored science and engineering, and there were no immediate clear consequences. There were just the hyperinflations and the collapses of those fiat systems. But because they abandoned gold and there was no digital money, the only alternative to one fiat, the Weimar Republic fiat currency, was the pound, and that alternative, was an alternative to the next thing and the next thing. So we were comparing fiat currencies or fiat monies to each other. And so there was no real need to embrace science and engineering. And Bitcoin is this paradigm shift where we have digital money crashing into, I guess, what we'll call analog money, or maybe a political money is a better way to describe it. And now we start to ask the question again, what is money? Mm. And I think tokenized energy isn't good enough to explain what is money. Another way to describe money is by coming back to the ideal model. What is the ideal model of money? Ideal money is a shared, immutable, correct ledger. You've heard the phrase, Bitcoin is a shared immutable ledger, and people debate about whether it's truly immutable or not. But a crypto asset network, fully decentralized and mature, is the closest thing we can get to an immutable shared ledger in the history of the world. I think a lot of times when people describe it as a shared immutable ledger, they leave off the correct or the mathematically correct, because it's almost implied. But I think that if you were to focus upon the three critical dimensions of ideal money, you would say it's a ledger that's shared. Everybody in the political system has to have the same access to the ledger. It has to be immutable. No one can doctor it, but it has to be correct, mathematically complete or mathematically proper, because if it's incomplete or incorrect, then it's not ideal money. So if I take that as a model, money is a shared, immutable, correct ledger, right? Then I can imagine the perfect money would be, some godlike being comes down on earth and they create this perfect, uncorruptible system, and they telepathically drop that shared, immutable, correct ledger into the heads of every human being. And every time you incur a debt, it updates the ledger. And when you incur a credit, it updates the ledger. Rome was the greatest empire on earth. When their final settlement network failed, then the empire collapsed. And what you have is just history is the endless succession of successive empires rising up with a new gold standard that was not debased. And then generation after generation, the coinage of that next empire, the successor empire, would be debased, and then that empire would fail and collapse, and then another empire would come along, and they would start the cycle over and over again. And yet the myth of gold as immutable money, right, or the sovereign store of value, it stayed with us for thousands of years into the 20th century. I would say that the gold standard has been dying a slow death, a death by 1,000 cuts. 1914 comes along. We've got the golden age from whatever 1870 to 1914, but then World War I comes along, and then in 1914, every country abandons the gold standard, and maybe that's the final cut. And after World War I, the Treaty of Genoa, we came back to a gold reserve standard. And in essence, we had gold backing the And that degree of backing successively slid. So there was a debasement of the pound and the dollar consistently and gradually. And then, of course, the pound and the dollar became layer 2 applications, if you will. And then every other currency became a layer 3 derivative. Mm-hmm. And then everything else in the economy was built on those derivatives. So you had basically layers of derivatives of gold that got progressively less backed by tangible energy or denurtured. And that resulted in, who knows how many collapses. The Great Depression, eventually you get World War II, which you could say, came out of just a bunch of economic collapses like the Weimar Republic. And all the gold ended up getting centralized, and seized by the Americans in Fort Knox. And then we wrapped Bretton Woods around it. And Bretton Woods was the second gold reserve standard of the century, except this time it's just the dollar was the reserve currency, backed some percentage by gold, say 40% or 30% by gold. And then every year thereafter, it slid from 40 to 30 to 20. Mm-hmm. I shudder to say, right? It must have been less than 10 by 1971. And in 1971, we defaulted on the gold standard. In essence, at that point, right, the gold reserve standard was effectively dead.
Right.
Gold still has the fiction of being a store of value and an asset. And if you're looking for a non-sovereign store of value, between 1971 and the invention of Bitcoin, you could have gone to gold. I guess you could have used property like land or commodities, timber rights, oil rights, something like that. And you could have used art. There's probably no one king, right? People dabble with is silver, a store of value. I think the free market went back and forth, but it's pretty clear that gold kind of died. It started dying, if not it died as a store of value about 10 years ago. Mm-hmm. As far as I can see, when Bitcoin was formed. And if we look at performance in the last 12 months, right, let's just for kicks, let's just go and look at 12 months of performance. So it's quite a day, right? In 12 months, Bitcoin is up 240%. Gold is down 9.82%. Over the course of 10 years, Bitcoin is up 132% compounded annual growth rate. Gold is 94 basis points. The S&P index is 13.9% over 10 years, 33% over 1 year. And summary, right, is gold is not a store of value in the last decade. It's something opposite of a store of value. Mm-hmm. If the S&P is up 33% in 12 months, then a reasonable surrogate for the collapse of purchasing power of the currency in 12 months is, the inverse of that, right? But you could say you need 33.7% more money to buy the same share of the S&P.
Yep.
So a store of value has to clock at 33% or better. And gold is minus 40%. And Bitcoin is plus 200%. So that's the marketplace screaming at you that no one really sees gold as a monetary asset anymore, except for the gold bugs.